Hey, my name's John Stevenson, and I'm your host of the Guaranteed Retirement Guys show. Today, we're going to be talking about whether or not you should take periodic payments from your annuity or just take it as a lump sum. Okay, so you've had your annuity for a while. You're thinking about annuitizing it. Or maybe you just have an income rider and you want guaranteed lifetime income, which of course most of my clients will do that because they want to have, with an annuitization, typically you just give up all control of your money and you'll do, periodic payments for the rest of your life, which is fine. But most people don't want that. Most people want the highest amount of guaranteed income for the rest of their life, plus the flexibility to stop those payments and take their money out. Or if they decide not to start those payments at all and they just want to take out a lump sum, they could do that too. You'll see that I am sharing my screen, and I wanted to show you just an example. I just put $500,000 in, Colorado, age 60, taking income at 67. So let's say this guy wants to take income at 67 because he's going to take out his full Social Security benefit at that age, and maybe he's taking his pension now or later, but at least for this example, he's going to take income at 67 from his annuity. Now, this is periodic payments, okay? So periodic payments is, well, you can see the top ones right now are paying roughly $64,000 a year. If I were to put that in monthly, then they are going to be putting in $5,300 into your bank account every single month for the rest of your life. And so if you think about that and you're like, all right, well, you know what? I'm going to live a long time. I mean, my grandpa lived a long time, or maybe he didn't, but I'm a whole lot healthier than him. Maybe I'm going to live till I'm 97. Okay, well, if I'm living till 97, what is that? That's 30 years times 64,000. That's pretty good. It's like $1.9 million from a $500K investment. Well, that's pretty good. Well, what if I don't want to do that? What if I just want to take out my lump sum? Okay, well, let's see here. Lump sum. If I were to have average growth, well, this one doesn't give you very much growth. Okay, lump sum, $589,000. Probably would not be the best one for growth because a lump sum is not that much. I mean, $589,000, which let's say you were able to earn 5% interest on that, 589 times 5%, you take out $29,450 a year for the rest of your life. Now, as living off of interest, you'll leave the balance behind, which is great. But if you want income, it's like less than half. Okay, so it's not great for income. Okay, let's look at some of these others. Let's see if we can get some more growth. Let's see if Aspida gives us decent growth here. Well, that's not bad. All right, so about the same. $593,000 at the end of 7 years. So if you want to take out that lump sum, I suppose you could do that. All right, let's look at another option. Athene has some pretty decent growth. So we'll take a look at that. I would only consider this, for your strategy, if you were looking at possibly taking a lump sum versus taking monthly payments, then look at this because, Athene is going to pay you less income, $61,000 instead of 64. Let's see here. And the possible growth can be $600,000. So these are all really close. It's like between 580 and 600. So the difference is what, $20,000. So if you were thinking you want lump sum more than you want annuity payments, then here's what you need to do. We're just going to go up here and we're going to say, you know what? We don't want to pay for an income rider. Okay, an income rider gives us the most income possible, which $64,000 a year for 30 years is $1.9 million. That's really, really good. If you pay fees of $50,000 for an extra $600,000 or $700,000 in income, that is totally worth it. But if you're looking for just a lump sum, then what we would want to do is we'll just say no rider fee whatsoever. We don't want any kind of income rider because we are not going to take periodic payments. All right, so if we look at that, then you can see the payments go way, way down. I mean, if we're going to look at annual income, instead of $64,000, it's $43,000. So not great. But that's fine. We want as much growth as possible. So what we'll do is we'll go in here and say, you know what? We only want an A-rated company as well. And let's say A+ rated. Midland's been around for 120 years. They're a pretty good company. So let's look at what this could look like as far as growth and what our lump sum would be at the end of 7 years. Okay, end of 7 years. Well, that's not bad. Now we're talking here. So $715,779 instead of $600,000. So that's the difference is you don't have any rider fees. And of course, the income is going to be a lot lower. But they also do give you an option if you do have a decent amount of growth and you still want to take periodic payments. Maybe you change your mind. You don't want the lump sum of $700,000, but you want to take periodic payments. Well, at that point, it's going to be less than $64,000, but it's still going to be higher than the $43,000. So at this point, you're getting like $55,000 a year. So that's nice. It's nice to be able to have that option for doing that. Now, if you want, let's see if there's any other annuity that would give us growth. Let's see what Annuitization would do for us. All right, so the end of, it's about the same. For the end of 7 years, lump sum is like $730,000. Income would only be $47,000. So again, not a great income product. Let's take a look at Allianz. Allianz is a great company. They are over 100 years old, and they've got $1 trillion in assets. They're very strong and very big, so they got a lot of capitalization, and people like that because you get a lot of safety. But the income it's terrible. I mean, it's $26,000. But if you get decent growth, they'll give you $47,000. All right, well, that's not that. Yeah, even the growth on that, $551. So I would say the winner for this for growth looks to be Midland National. Let's look at one more. See Athene. All right, so Athene, $693. So didn't quite get as far as Midland did. And the income is pretty close to Midland, so $54,000 versus $55,000. So, all right, well, there you go. I would say if you are looking for maximum income, maximum periodic payments, pay the fee. Because do you want $38,000 a year, or do you want $64,000 a year? I mean, it's totally up to you. But typically, if you're looking for the highest amount of income possible, oh, look at this. Oh, we got $75,000. But these are Annuities where they give you a bunch of income in the beginning and then it drops at age 72. So if you don't want it to drop, you probably don't want to pick these ones. But again, if you don't want something that drops and stays steady for the rest of your life, then it looks like the F&G at $64,000 per year is the winner. So other than that, we can look at some other growth annuities, and there are other ones out there that we can look at that might even give you more growth than Midland National. So we can look at those too. They change all the time. There's a lot of different things to take into consideration. Some indexes with certain annuity carriers are giving you much higher participation rates, higher cap rates, and maybe no spreads, which will give you a higher lump sum later on. But remember, that is all hypothetical. Okay, you never know what it's going to earn. It might earn good, it might not. Just depends. But if you're looking for the highest periodic payments and you don't care so much about the lump sum, especially, if you're going to take that lump sum out, what is it going to be used for? Is it going to be used for income? If it's going to be used for income, you got to ask yourself, are you going to be able to generate as much income from that money that you take out in a lump sum? Are you going to be able to generate as much income versus just having an annuity that is focused on income, that's charging you a small fee for it, but the total ROI is much, much bigger over your lifetime? So you are obviously the captain of your fate. You got to decide for yourself what you're looking for. So I'm just the facilitator, and you'll notice there is a link below this video. Go ahead and book a call. If you want to chat about your annuity needs, your retirement needs, your income needs, your growth needs, whatever you're looking for in an annuity, let's look at it together. And I'll show you everything that I have access to, which is everything on the market. And we'll go ahead and answer your questions. And if there's something you want to pull the trigger on, I can certainly help you do that too. So anyways, thanks for watching. Please like, subscribe, share, and we'll see you in the next video.